If you're retired in Australia and relying on Centrelink payments, what I'm about to share could protect your income in 2026. Every year, thousands of retirees receive review letters, compliance checks, or requests for updated information. Some respond late, some misunderstand the questions, and some ignore the letter completely, thinking it's routine, only to discover their payments have been paused. In 2026, Centrelink reviews are more targeted, more digital, and more detailed than ever before. So today, I'm breaking down exactly what these reviews mean, why you might receive one, and how to avoid payment delays or costly mistakes. Welcome back to Centrelink Compass AU, your trusted guide to navigating Centrelink with clarity and confidence. If you're on the age pension, carer payment, or receiving Commonwealth Seniors Health Card benefits, this video is especially important for you. First, let's talk about what a Centrelink review actually is. A review is not automatically a penalty. It's a reassessment. Under Australia's social security system, Services Australia regularly checks that recipients are still eligible for their payments. That means reviewing income, assets, living arrangements, relationship status, and sometimes overseas travel history. These checks are part of compliance measures managed by Services Australia, the government agency responsible for delivering Centrelink payments. Many retirees assume that once they're approved for the age pension, the hard part is over. But eligibility is ongoing. Your payment rate depends on income and asset thresholds set under the Social Security Act and indexed periodically. If your financial situation changes and Centrelink isn't informed, it can trigger overpayments or suspension. In 2026, reviews are increasingly data matched. Services Australia works alongside the Australian Taxation Office and other government bodies to cross-check declared income. That means discrepancies are picked up faster. If you've started earning bank interest, sold shares, received rental income, or adjusted superannuation withdrawals, it may be flagged automatically. So why are retirees getting review letters now? There are several common triggers. One is asset threshold proximity. If your declared assets are close to the maximum limit for pension eligibility, Centrelink may conduct periodic checks. Another trigger is changes reported by financial institutions or through tax returns. If declared income doesn't match what the ATO records, it prompts a review. Another common trigger is overseas travel. If you leave Australia for extended periods, pension portability rules apply. Time outside Australia can affect payment rates. Even short trips may require notification. Many retirees forget to update their travel details and receive compliance reminders afterward. There are also random compliance checks. Not every review is triggered by suspicion. Some are routine audits to ensure system integrity. Now let's talk about the most important part, how to respond properly. When you receive the Centrelink review letter, it will outline what information is required and provide a deadline. That deadline matters. If you miss it, payments can be suspended automatically by the system. Suspension doesn't mean cancellation, but it does stop your income until you comply. Step 1 is read the letter carefully. Identify what documents are requested. Common requests include updated bank balances, share portfolio statements, property valuations, rental income details, or confirmation of relationship status. Step 2 is gather documents early. Don't wait until the final week. Financial institutions sometimes take days to issue official statements. If you need help accessing documents online, ask a trusted family member or visit a Services Australia service centre. Step 3 is submit information through your MyGov account linked to Centrelink. Digital submission is faster and provides confirmation receipts. If you're not comfortable online, you can submit in person, but make sure you keep copies. One major mistake retirees make is underestimating small income streams. For example, term deposit interest, managed fund distributions, dividends, and even small consulting income must be declared. Centrelink uses Deeming rules for financial assets, meaning income is assessed at a set rate regardless of actual earnings. If you don't report asset balances accurately, the deeming calculation becomes incorrect. Another mistake is forgetting to report changes in living arrangements. If an adult child moves in, if you start renting out a room, or if a partner moves in or out, it affects assessment. Relationship status is critical because pension rates differ for singles and couples.
Let's also discuss gifting. Some retirees transfer money to children or grandchildren. Under Centrelink gifting rules, you can gift up to certain limits before it affects your asset test. If you exceed those limits, the excess amount may still be counted as your asset for 5 years. Failing to disclose gifts can trigger review complications later. Now, what happens if you ignore a review letter? Initially, you'll receive reminders. If no response is recorded, your payment may be suspended. If non-compliance continues, it can escalate to cancellation. Reinstatement is possible, but it can take time and requires full documentation. If you believe a review outcome is incorrect, you have the right to request a reassessment or appeal through Services Australia's internal review process, and if necessary, the Administrative Appeals Tribunal. The key is to act quickly and provide evidence. In 2026, digital communication plays a larger role. Many notices are delivered through MyGov inbox rather than physical mail. That means checking your online account regularly is essential. Some retirees miss digital letters entirely and only discover problems when payments stop. Another issue we're seeing is scams. Fraudsters sometimes impersonate Centrelink and send fake compliance messages. Official communication will come through your MyGov account or verified Services Australia channels. Never click suspicious links or provide personal information outside official platforms. Let's talk about preventing delays before they happen. Keep a simple record system. Maintain a folder, digital or physical, with updated bank balances, super statements, and asset summaries. Review them every 6 months. Even if Centrelink hasn't contacted you, being proactive reduces stress. Report changes within 14 days if required. Many payment types require prompt reporting of significant changes. Delays in reporting can create debts. Understand income test versus asset test. Centrelink applies whichever test results in the lower payment. Knowing where you sit relative to thresholds helps you anticipate reviews. If you're drawing down superannuation, remember that account-based pensions are assessed differently depending on when they commenced. Legacy products may have different rules. Clarifying this with a financial advisor can prevent reporting errors. Also, ensure your contact details are current. Outdated phone numbers or email addresses can prevent you from receiving reminders. Now I want to address anxiety. Receiving a review letter can feel intimidating, but in most cases, it's administrative. The system is designed to verify eligibility, not to punish honest retirees. Problems usually arise from incomplete information, missed deadlines, or misunderstanding rules. If you need help, there are financial information service officers available through Services Australia who provide free information sessions. While they don't give personal financial advice, they can explain how Centrelink assesses assets and income. It's also wise to review your Commonwealth Seniors Health Card status if you hold one. Eligibility thresholds differ from the age pension. If your income changes, it can affect concessions. Let's break down a real-life example. Imagine a single retiree with modest savings in bank accounts and shares. Over the year, dividends increase slightly due to market performance. The retiree doesn't update asset balances because they assume small changes don't matter. During tax data matching, the updated figures differ from declared amounts. Centrelink issues a review letter requesting updated statements. If the retiree responds promptly, the payment may adjust slightly but continue. If ignored, payments may pause. Another example involves property. If you inherit a share in a property or receive proceeds from selling an asset, it changes your asset position. Even temporary increases in bank balances before funds are distributed can affect assessment. Overseas travel remains a key focus area. If you plan extended trips,
Check portability rules in advance. Notify Centrelink before departure to avoid complications.
In 2026, automation means reviews can be processed quickly. That's efficient, but it also means there's less room for delayed manual follow-up. Timeliness matters more than ever. Here's your practical checklist moving forward. Check your MyGov inbox monthly. Keep financial documents updated. Report changes promptly. Respond to review letters immediately. Verify communications to avoid scams, and seek clarification if you're unsure. Retirement should be about peace of mind, not paperwork stress. By staying informed and proactive, you can protect your payments and avoid unnecessary delays. Before we wrap up, I want to remind you that policies and thresholds can change with government updates and indexation adjustments. Staying updated through reliable sources ensures you're never caught off guard. If this breakdown helped you understand Centrelink reviews in 2026, make sure you share this video with other retirees who might need it. Too many Australians lose sleep over letters they don't fully understand. Knowledge replaces fear with confidence. On Centrelink Compass AU, our goal is simple: to help you navigate Australia's social security system clearly, calmly, and correctly. If you found value in this video, give it a thumbs up and subscribe so you never miss critical updates that could affect your income. Remember, a Centrelink review isn't the end of your payment. It's a reminder to stay accurate and informed. Take action early, respond carefully, and keep your retirement secure. Thank you for watching Centrelink Compass AU. Stay informed, stay prepared, and I'll see you in the next update.